August lean hogs closed ever so slightly lower here. It was an inside trade day when you look at yesterday's range, meaning we didn't get over yesterday's high, which by the way was a new contract high for that August hog contract. We also didn't get below yesterday's low or Wednesday's low. So really consolidating yesterday's range up here near the highs, which isn't necessarily a bearish factor, even though we closed one tick lower on the day. Just sort of taking a little bit of a breather, and again, consolidating yesterday's ranges. The other thing is that we have gotten very overbought on the relative strength index for that August hog contract. It sits at 77.5% again on the relative strength index. Anything over 70% is considered overbought. Anything over 80% is considered an extreme case of being overbought. So that might be another reason why we just kind of traded sideways here on Thursday, trying to correct that relative strength index a little bit. Sometimes sideways trade will be able to do that. Either way, still hanging out near that overbought, or actually really near that extreme case of being overbought. So that is something to keep an eye on. In the meantime, we saw pork cutout values again this morning higher once again, 115 over 115. It's a really strong pork cutout value. And the interesting thing about that is that slaughter this week so far has been higher than last week and higher than the same week the previous year. So that suggests that domestic demand is really very good. However, not domestic demand, our weekly export sales report was near a marketing year low. It was the second lowest weekly export sales figure that we had seen at 9,700 metric tons. That's down 73% from last week and 70% lower than the 4-week average. So these higher prices might be taking their toll on our pork exports. That is absolutely something to be watching out for. So in the meantime, you take care, everybody, and you stay safe.